Welcome to Talk Tickers. We're the place you come to get the key takeaways from the latest earnings calls without having to sit through the whole thing.
That's right.
Today, we're digging into NewMarket Corporation. Ticker is NMI. This is for their first quarter of 2025.
Yep, Q1 results just doused.
And the big headline, well, it looks like overall profit saw a pretty nice jump.
It did. Net income climbed quite a bit, reaching $126 million.
Wow, okay.
Yeah, that's $13.26 per share. Compare that to last year, same quarter, it was $108 million, or 11.23 per share.
So a decent increase on the bottom line.
Definitely a strong number to start with. But as always, the story gets a bit more, let's say, interesting when you look beneath the surface, right?
Exactly. Because while the overall profit is up, their main historical business, Petroleum Additives, actually saw a dip.
Okay, tell us about that.
So sales in that segment were down $646 million this quarter compared to $677 million last year. And operating profit slipped too, from $151 million down to $142 million. So what's causing that drag in the petroleum additives part of the business?
It really comes down to lower shipment volumes. That was the main factor they pointed to. If you break it down, lubricant additive shipments, they were lower in Asia Pacific and North America.
Right.
Though they did see a bit of an offset, some increases in Europe and Latin America.
Okay, mixed geographically then. What about fuel additives?
Fuel additives were mostly down across almost all regions, actually. The only exception was a very small uptick in Asia Pacific.
So volumes are under pressure? Did management say how they're dealing with that?
Yeah, they emphasized their focus on, operational efficiency, keeping things running smoothly, controlling costs.
Right, managing the margins.
Exactly. They framed it as helping maintain, quote, strong profit levels despite those lower volumes. They also acknowledged the wider picture.
The macro environment.
Yeah, ongoing economic challenges, uncertainty around trade, tariffs, the usual headwinds you hear about, especially for a business tied to industrial activity.
Which petroleum additives definitely are. It sounds like they're focusing on what they can control internally when the external factors are a bit rough.
That's a good way to put it. It suggests, protecting profitability is key, even if growing the top line is tough right now in that segment.
Okay, so that's the established business. But the other side of the coin, specialty materials, seems to be where the real excitement was this quarter.
Oh, absolutely. That segment saw, dramatic growth is probably the right word.
Really? Give us the numbers.
Sales jumped to $54 million. Now, compare that to just $17 million in Q1 last year.
Wow, that's a huge leap. And profit.
Even more striking. It went from an operating loss of $5 million last year to a profit of $23 million this quarter.
Okay, so what's the story behind that turnaround? Is it organic growth or?
It's primarily down to an acquisition. Remember they bought Ampac back in January 2024.
Right. The defense and space materials company.
Exactly. So Q1 last year only had a little bit of Ampac's results in their post-acquisition. This quarter, Q1 2025, reflects a full 3 months of Ampac's operations. That's the main driver.
Got it. So the year-over-year comparison is naturally going to look very strong because of that timing.
Precisely. But management did add a note of caution. They said because of the project-based nature of that business, we should expect quarterly results in specialty materials to fluctuate quite a bit going forward.
That makes sense. Big defense or space contracts don't always land evenly quarter to quarter.
Right.
And speaking of Ampac, there was some news on investment there too, wasn't there? Pretty big number.
Yes, a significant capital investment. They announced plans for up to $100 million into Ampac's facility in Cedar City, Utah.
$100 million. What's the goal there?
To boost production capacity by over 50%. They're aiming to get it done sometime in 2026.
50% capacity increase. That signals some serious confidence in demand.
It really does. They specifically mentioned growing demand for solid rocket motors, not just from the U.S. military and space programs, but also, interestingly, from U.S. allies. They even referred to Ampac as a, quote, strategic national asset. So it highlights how important they see this capability, both for the business and maybe for national security supply chains.
That's a strong statement. Okay, so we have the segment performance, the big investment. What about the overall financial health and how they're using their cash?
Well, they generated strong cash flow in the quarter, and they returned a good chunk of it to shareholders.
How much are we talking?
About $83 million in total. That was split between $57 million in share buybacks and $26 million paid out as dividends.
So returning capital is clearly still a priority.
Seems so.
Yeah.
And related to financial health, they also significantly improved their leverage situation.
Oh, yeah. How so?
Their net debt to EBITDA ratio, that key measure of debt relative to earnings, came down quite a bit. It was 1.9 times at the end of Q1 last year.
Okay.
As of the end of March this year, it's down to 1.1 times.
That's a healthy improvement. Gives them more flexibility.
Definitely. A stronger balance sheet is always good news.
And throughout the call, did management sort of reiterate their overall philosophy or guiding principles?
They did, yeah. They touched on their core themes. Taking a long-term view, safety being paramount, focusing on customer needs, using technology, and having a really solid supply chain. You know, the foundational stuff they believe drives value over time.
Right, the standard pillars. So bringing it all together, what's the key takeaway for investors looking at NewMarket right now?
I think it's a picture of a company in transition, navigating a pretty complex environment. You've got the traditional petroleum additives business facing some, let's call them cyclical headwinds, but that's being offset, or perhaps more than offset, by this strategic move into specialty materials via Ampac, which is clearly in a high growth area like defense and space.
And the big investment confirms they're doubling down on that strategy.
Absolutely. That $100 million investment is a huge signal. Plus, the improved balance sheet gives them strength. So going forward, you'll want to watch, well, both sides. How resilient is the petroleum additives business?
Right.
And what's the growth trajectory and integration progress of Ampac and the specialty materials segment, keeping in mind that warning about potential choppiness in quarterly results there.
That variability is definitely something to factor into expectations.
For sure.
Okay, great analysis. Now let's shift gears completely. It's time for that segment where we put on our highly speculative thinking caps. Remember, everyone, this is absolutely not financial advice, just a bit of creative thinking.
A disclaimer noted. Let's hear the wild idea.
All right, so NewMarket is pouring $100 million into Ampac to make more solid rocket motors because demand is way up from the military space program's allies.
Right, we covered that.
So the thought experiment is this. If you're making way more rocket motors, what else do you absolutely need more of? Maybe something less obvious than the main chemicals.
Okay. Where are you going with this?
Think about the extreme conditions inside a rocket motor.
Yeah.
High pressure, intense heat. What keeps everything sealed and contained?
Specialized seals, O-rings, things like that.
Exactly. High performance seals and O-rings designed for those specific aerospace and defense applications. So the trade idea, purely hypothetical, of course, is maybe a long position in a company that specializes in making those critical, highly engineered seals, especially one known to supply that sector.
Okay, I see the logic. More rockets means more demand for those specific, crucial little components.
Right. And to make it a paired trade, maybe you hedge against the broader economic concerns that might still weigh on NewMarket's other business, the petroleum additives.
How would you do that?
Maybe consider, again, hypothetically, a short position in a more general, diversified industrial chemical company, one that doesn't have much defense space exposure and is more tied to, say, general manufacturing or the auto industry, which might feel an economic pinch more broadly.
So long the niche supplier benefiting from the rocket boom, short the broader industrial chemical company exposed to potential slowdowns.
That's the thought experiment. Tries to capture that specific Ampac growth catalyst while acknowledging the wider risks. Again, just an idea to mull over, not a recommendation.
That's definitely thinking outside the box. Focusing on a potentially overlooked part of the supply chain, an interesting structure for a paired trade idea.
Well, that wraps up our deep dive into NewMarket Corporation's Q1 2025 earnings call. We've hit the financial highlights, unpacked the different segment stories, and even ventured into some creative trade speculation.
We covered a lot of ground.
As always, we encourage you to do your own research, look at the details yourself, and draw your own conclusions. Thanks for tuning in to Talk Tickers.